2 days after the Reserve Bank knocked 25 basis points off the official interest rate, and the big four banks say a decision on cutting their rates is still under review. Well, several smaller institutions have already passed on the rate cut to customers, although just 3 have reduced the cost of borrowing by the full 1/4%. The Treasurer, Wayne Swan, is urging customers to move their money if they feel they're not getting a good deal. But what about the cost of doing that? Here's Damian Smith, the CEO of online comparison website RateCity. So, Damian Smith, could you firstly run through the banks who have matched the RBA reduction, and then which are the big names who are still sitting on their hands?
Well, in terms of the big names, we seem to be in an episode of waiting for Gail Kelly, because the big four haven't moved at all, and nor have their subsidiaries. The banks representing well over 80 to 90% of the lending market haven't moved. Bank MECU, ME Bank, Bank of Queensland are the conspicuous movers. They've moved, and a couple of very small institutions have moved also. But the reality is that the vast majority of institutions haven't moved, and the fact that the big four haven't moved 48 hours later is pretty concerning.
You say waiting for Gail Kelly. Is the implication of that if one of them goes, they all will?
Absolutely. I think, this is like a cycling race where someone decides that they're going to go to the front of the pack. One of these guys will move. I think that someone will do it this week, and as soon as one of them moves, the dam will break and they'll all move. But the fact that they haven't moved this far tells you that the chances of them moving the full 25 basis points is probably pretty low right now.
Well, the Treasurer is urging people certainly to move their money if they're not happy with the bank they're with. It's often not as clear-cut as just replacing one loan for another. What are some of the fees and charges involved?
We estimate that the average cost of switching is sort of $700 to $800. That's made up of a combination of some upfront fees when you go to your new lender and some exit costs. Now, for new loans in the last few months, those exit fees are negligible, but most people took out loans pre-June 30, so there are some exit fees for some of those people. But the math's actually not that complicated. If you've got a $400,000 home loan and you could knock 0.25% off that rate, you would almost certainly be ahead within 12 months. Now, if you could knock a full half a percentage point off, you'd be well ahead 6 to 7 months down the track, even with a switching cost of around $1,000. So it's well worth people looking at it, even though there is a time cost as well.
Now, we're talking variable mortgage rates here, but what about business loans? What about deposit accounts?
Well, deposit accounts will be a really interesting test in the next few days. There hasn't been much movement yet, not surprisingly, but this will really tell the tale of the tape. If the big four institutions move deposit rates down but don't do as much on lending rates, then I think that it will give the lie to some of these arguments about funding costs. If they keep deposit rates high and don't pass on the full cost in lending, then there'll be some truth to the possibility that they want to keep deposits high. But we haven't seen movement there yet. Now, business lending's a different kettle of fish. Some of those loans aren't really linked to the cash rate, to be fair to them. Those that are really things like residentially secured small business loans. A lot of small business owners use their property as security. Last month, those moved pretty much in line with residential mortgages. There's no excuse for those loans not moving by the same rate as any mortgages do.
Damian Smith, thank you.
Thanks, Roz.